Alright guys, so what is actually the core objective of Operation Economic Outcast? At President Trump's direction, the US Treasury Department officially initiated the Operation Economic Outcast campaign, described by Treasury officials as a full-scale economic onslaught. The program seeks to map out, expose, and sever the global financial web sustaining the Iranian regime. Treasury Secretary Scott Bessent previously referred to this strategy as an economic D-Day. Right? Economic D-Day, framing the campaign as the ultimate effort to neutralize economic threats coming from Tehran. According to Secretary Bessent, the ultimate objective is clear: to sever every economic lifeline that sustains the regime until it is completely isolated. The official message sent to international partners is uncompromising. Those who align with US economic enforcement will maintain open commercial channels, while entities that tether themselves to Tehran can expect to share in total global isolation. Now, in my opinion, this aggressive posture isn't simply standard diplomatic pushback. It represents a fundamental overhaul of how nation-state blockades are designed. By targeting financial mapping rather than just physical ports, the Treasury is effectively trying to make the traditional sovereign economic architecture completely untouchable for designated entities. So, why is the US Treasury explicitly targeting the crypto sector? While past sanctions campaigns focus primarily on traditional banking rails, shipping lanes, and heavy industry, Operation Economic Outcast takes a direct, unprecedented leap into decentralized technology. The Treasury Department explicitly stated that its Office of Foreign Assets Control, or OFAC, now has the authority to sanction any individual or institution, regardless of their geographical location, if they operate within or support the digital asset sector tied to the Iranian economy. Treasury officials highlighted that cryptocurrency has rapidly evolved into a primary tool for sanctions invasions, facilitating high-value transactions linked to regime insiders and the Islamic Revolutionary Guard Corps. By placing digital assets in the exact same high-risk classification as technology, gold, aviation, and shipping, the government is signaling that borderless ledgers will no longer serve as an unmonitored backdoor. Now, in my opinion, I see this direct inclusion of digital assets as a pivotal double-edged sword for our industry. On one hand, it confirms that digital assets have reached institutional-level global liquidity, where world powers view them as crucial economic infrastructure. On the other hand, it forces secondary service providers and global exchanges to tighten compliance standards dramatically, effectively squeezing out anonymous cross-border settlement. Now, how are foreign entities and facilitators being caught in the dragnet? Under Operation Economic Outcast, enforcement is not limited strictly to domestic platforms or direct military proxies. It extends to third-party intermediaries worldwide. The Treasury Department confirmed that it has spent months mapping out complex networks, facilitators, and hidden settlement channels. These channels have historically been utilized to move oil revenues, fund external operations, and bypass traditional clearing houses. Foreign national entities operating in neutral jurisdictions now face a stark choice: assisting in the movement of digital assets, physical gold, or commercial cargo for block networks will instantly trigger secondary sanctions, cutting those institutions off from the US dollar clearing system entirely. The Treasury's message creates a high-stake ultimatum: choosing complete compliance or accept total expulsion from international finance. In my opinion, this global reach proves that friction point is moving away from the blockchain itself and toward defiant gateways. Blockchains remain open, public code, but the moment an entity tries to convert those digital tokens into physical commodities or fiat currencies, the compliance pressure becomes absolute. Now, why is Bitcoin holding above $79,000 despite geopolitical escalation? When major geopolitical conflicts erupt or global enforcement actions drop, traditional markets often reflexively pull back into liquid cash. However, Bitcoin's price movement throughout this latest news cycle tells a fascinating story. Despite the headline risk associated with escalating conflict and severe new regulatory actions, Bitcoin has remained remarkably steady above $79,000 mark. Even after experiencing a brief bout of volatility following separate announcements regarding new economic tariffs on Canadian goods, the leading cryptocurrency quickly absorbed the sell pressure. In fact, Bitcoin staged a swift recovery, pushing up to an intraday high right at the key psychological barrier of $80,000. Rather than crushing under the weight of geopolitical uncertainty, the market appears to be absorbing these macro shocks with notable maturity. In my opinion, Bitcoin's ability to defend $79,000 price level amid major war headlines demonstrate a profound shift in market perception. Investors are increasingly treating digital gold not just as a speculative risk asset, but as a neutral macro hedge that continues processing transactions regardless of global policy disputes. All right. And finally, for our overall conclusion, the launch of Operation Economic Outcast by the US Treasury Department marks a historic turning point in how modern economic power is exerted. By placing digital assets directly alongside traditional industries like aviation, shipping, and gold, the US government has made it clear that cryptocurrency is now a primary battlefield for international economic policy. Yet, even as global regulatory pressure intensifies and geopolitical risks escalate, Bitcoin's firm footing above $79,000 highlights the market's expanding resilience and institutional depth. As the line between global politics and digital assets continues to blur, staying informed on structural policy shifts will be vital for understanding where the market heads next. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one. But if you enjoyed watching this video, then you might just as well check this next recommended video right here.